Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video I'm going to take you through the week ahead analysis. We're going to go through the news and some key charts to watch going into this week's trading. So we have a big week for news, and there's a couple of statements out this week that I think that we need to keep a big eye on. So Tuesday and Wednesday, more focused around central banks. So you can see here we have the RBA. The RBA are looking to increase their interest rates for the first time this year to 0.25%. So nice big change here for the Aussie. The RBA have been talking about hiking rates for some time without really fulfilling that just yet. But it looks like we're going to get it in this meeting. The Australian dollar has dropped quite significant strength recently, so it's going to be interesting to see if what they say in the RBA statement continues to push that narrative, or whether we see the narrative change for the Australian dollar after this statement. Other data then, so we do have some unemployment data out of Kiwi, out of New Zealand, so some interesting data going on there. The big one for the week, or the two big ones for the week, but we'll start off with the first one that's out, which is the FOMC statement and the federal funds rate, which is looking at that 50 basis points jump, which we've been talking about for some time. Jerome Powell, the Federal Reserve Chairman, came out a week ago and basically said that the next hike is going to be by 50 basis points, really trying to control the rate at which inflation is rising in the US. Inflation continuing to move higher, and the dollar really dominating the market at the moment. So this could help fuel that move, or we could see a little bit of a reversal, just because what we typically see, we usually see the dollar rally towards the event. Once the event has been announced and we see the announcement come and the move to a rate hike, we often see a little bit of downside from that. So a lot of retail will look at this and say, okay, well, it's going to hike, we're going to be buyers of the market, but institutions have already done the buying part of things, and the dollar index is at a really big high. So on Wednesday we could see a little bit of a change to the momentum to the dollar, especially if they talk about any kind of slowdowns in upcoming rates and things like that, like the Bank of England have recently done in the press conference. So that could be an interesting one to watch. We also then have the Bank of England. Now we know that recently the Bank of England Governor Bailey talked about the fact that they're slowing down the rate at which they increase interest rates due to recessionary fears, and you can see here they're only hiking by 25 basis points to 1%, and again I think this could have quite a negative impact for the pound if Governor Bailey continues to talk about those recessionary fears. And then finally we have the NFP. So we're going to have a very volatile week in terms of high impact data, which again, volatility can lead to some risk off in the markets. As volatility indexes increase, we tend to see the yen perform well, the dollar perform well, so we could see that narrative remain for this week. Moving on to the strength meter, nothing really here to kind of flaunt too much about, apart from Kiwi has severely dropped off against most currencies. We have Aussie as well, which dive a little bit, which you can see on this grey line just down through here. So Aussie, Kiwi still the sort of weaker currencies at the moment. Dollar now overtaking all the currencies of the strong currency, and we're starting to see a slight bounce in the yen and the euro. So looking at some potential crossover moves here, especially like Euro Oz, for instance, could be a good one to watch. So moving on to euro dollar, it's going to be an interesting one to watch this week, just because of the FOMC news could obviously put price either way. We can see that the dollar's been strong coming into this meeting, so we could see a slight reversal to that going into Wednesday and after Wednesday. So be interesting to see how the market does shape up. If Federal Reserve talk about further hikes in the future and the NFP numbers are good, dollar could still remain bullish and we could see some further downside to euro dollar. However, like I said, usually when leading up to this event, we usually see a strong dollar. At the event, we usually see a little bit of a weaker sentiment. So we could see euro dollar pulling back slightly, even if we can get back to these sort of 108.09s, could be an interesting scenario for the euro dollar price. Moving on to Kiwi then. So expecting a bit more downside to this market. Like I said, though, it depends on how the dollar gets on later in the week. Kiwi very bearish, though, so I'm just highlighting this Kiwi dollar chart because it shows us that the momentum at the moment is definitely to the downside for the New Zealand dollar, and you could probably look at short opportunities of this currency against currencies that are getting stronger. So you may want to avoid the dollar this week, but we talked about the likes of the yen and the euro starting to bounce from the lows of the strength meter, which could offer some opportunities against the New Zealand dollar. Euro Aussie, so this is one of those cross pairs that I quite like the look of at the moment. Obviously, we recently broke to the downside here, breaking through these key support levels. We've started to see a nice bounce after the market started to consolidate at this key sort of 1.456 area. Started to see a bounce in the market now, and if we look at the 4-hour time frame, we saw the consolidation, strong breakout. We've retested that consolidation and it's starting to break out of this sort of counter trend line again, and these previous structure points. So if we can see those structures being broken through here, it'll add a lot more positivity into long opportunities for this market. So if we can hold above these previous structure highs here, then we could look for long opportunities on higher lows. Finally then, gold. Gold is going to be a very interesting market to watch going into this week. Obviously, Federal Reserve hiking interest rates. Gold has been moving higher off of inflationary pressure. However, as the Fed announced rate hikes, we've seen gold take a turn. In the past couple of weeks, we've seen that turn, and that's been coinciding pretty much with the Federal Reserve chairman talking about hiking interest rates. So again, we may see a couple of different things happen here. We may see gold remain under pressure early in the week. If, however, the data is priced in and we do start to see some short-term dollar weakness, we could expect maybe, we've got this head and shoulders down here, we could expect maybe a little bit more upside to gold going into this week. So keep an eye on that one. It's definitely going to be an interesting market to watch going into this week due to the volatility of the high impact data. So keep your wits about you, and good luck, and thanks for watching this video update. If you did like it, leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll speak to you in the next video.